North American companies. He is a sales development specialist with North American, and he's going to talk to us today about the competitive advantages of using North American products. If you do have any questions and you are online, you can type those in the chat feature, and I will get those answered for you as we go along this morning. So take it away, Brandon.
Awesome. Thank you very much, Kelly. Again, my name is Brandon Borkstall, and I'm a sales development specialist here at North American Company. Because Premier Life and Annuities is a partner agency, I'm able to work with their team there. Again, today we're going to talk about some competitive advantages of North American Company. And really to start it off, a biggie is North American Company is a privately held company. How does that affect you as an agent? Well, the name of the game here is we're focused on the long-term success of the company. So you're not going to see products being pulled off the shelves and products being increased in what the rates are and all that good stuff. So the name of the game with us here at North American is focusing on that long term. We're really here for the long term. We're here for the long haul, and we have products and ratings to kind of back that up. North American is the fastest growing life carrier over the past 7 years at 16%, and we're very, very highly rated. A plus superior by AM Best, and A plus strong by Standard & Poor's. So a very strong company. And as we kind of go through the list here, you'll see that we obviously have very strong products to back up those ratings and that long-term focus. North American, we have universal life, term, and index universal life. When looking at our straight universal life, the big product that is very highly competitive in our industry is our custom guarantee universal life. Yes, we're highly competitive, have a very competitive product, pay premiums up through age 100, and it does guarantee through age 120. But you'll find that we're very competitive in short pays. You know, maybe you're looking at a 5-pay, a 10-pay, a single pay. So we're very flexible on that front, whether it's a level pay, all pay, short pay, single pay premium. That the custom guarantee is going to be a very, very competitive product. One thing I do want to touch on with the custom guarantee, yes, there's other companies out there that have that competitive premium. It's low cost, guaranteed death benefit. But something that North American offers is what's called a guaranteed exchange privilege. The name of the game here is just providing that flexibility to the client, as well as an opportunity for you as the agent and advisor to follow up and really show your value, because obviously as life goes, needs change, life happens. So maybe an individual with a young family takes out a custom guarantee at age 25. 15 years down the road, their needs and their focus might have changed. So you can enact this guaranteed exchange privilege, no additional or underwriting, and you can exchange coverage of the custom guarantee to, say, the Builder IUL. So it's got to be a non-guaranteed product, and the Builder IUL is focused on long-term cash. Obviously, you've still got that death benefit. First and foremost, it is life insurance, but you're going to have the opportunity to build cash, and you can do that without any additional underwriting. On the Builder IUL, you do get 15 years of guaranteed coverage, which is obviously a nice sell as well. So you're going to have that upside of some cash accumulation. Another biggie with that custom guarantee is what's called our guaranteed insurability rider. This is something that we've had some success talking to agents and marketers and advisors on using this to get coverage on a child. So you've got a young child, let's say you've got a $50,000 death benefit, you can use this guaranteed insurability rider up to 10 times without evidence of insurability, and the max would be the lesser of the total benefit, or $50,000. So think about that for a second. If a 5-year-old child has a $50,000 life insurance policy, this custom guarantee, you can use this guaranteed insurability rider 10 times by adding $50,000 worth of coverage without underwriting or additional underwriting. So just think about that and being able to have that conversation with parents. Getting the foot in the door, and then in the future they're going to have that long-term, that higher death benefit, and at the same time, in the future, they would be able to use that guaranteed exchange privilege if that were to come into play. So, boom, they turn 40 years old or whatnot, 30 years old, however you want to look at it, but they can then exchange the policy for a cash accumulation product. So really, at the end of the day, just providing that flexibility and control to the insureds, and at the same time, giving you as the agent and advisor an opportunity to really show your value with those policy reviews and just having that on the table. Another big benefit with North American's products is the accelerated death benefit endorsement. Again, just providing that peace of mind and flexibility if something were to happen. So we've got critical, chronic, and terminal illness. So the name of the game here is you hate to see somebody or an individual be life insurance rich and cash poor. So this really provides that flexibility and control to the insured if that life scenario, because as we all know, life happens. You never know what's going to happen tomorrow. If that what if happens, they've got some flexibility and peace of mind to know that they can access that death benefit and use it in their living years. Something I do want to point out is that our term product obviously is a very competitive product. The biggie with our term is the convertibility. Again, providing flexibility and control to the insured, and at the same time allowing you as the agent and advisor to have a reason to sit down and have a conversation with them in the future. Convertible to all of our permanent products other than the survivorship, and 10, 15, 20-year terms convertible through age 74, and on our 30-year term convertible through age 69, and regardless, the insured is going to have at least 5 years to convert. So you'll kind of notice a theme here with our products, and that's just providing that flexibility to the insured and that control to the insured as they go through life. Those needs change, obviously. So a big.
That's great, Brandon. Hey, I have a question on the accelerated benefit endorsements, because living benefits really are a huge part of value added to your products. And can you just touch a little bit on how those would actually work and how the client actually gets those, and how do they pay for them?
Yeah. So the biggie with our accelerated death benefit endorsement, to pay if you use it. So there's no additional costs, no upfront costs on the policy in order to get the accelerated benefit endorsement. Something they will have to do is obviously qualify. So in order to have the critical illness, the insured is going to be table 2 or better. Chronic illness is table 4 or better, and the terminal illness it's available regardless. So to touch on the critical illness, and like I said, pay if you use it. Critical illness, so the qualifications, the eligibility: heart attack, cancer, stroke, major organ transplant, or kidney failure. So one of those triggers happens. The biggie with our critical illness is just how easy it is and how straightforward it is. So what you can do, you can take, it's the lesser of 25% of the death benefit, or $50,000 is what you can take, and then all approved claims are going to receive a guaranteed rate of 40%. So let's say you take $50,000, we're going to discount that at 40%, and the insured is actually going to get $20,000 off their death benefit. The death benefit will drop by the full $50,000. Some might say, wow, that's a pretty big discount. But the biggie with this is how easy it is, how clean it is. It's an is what it is scenario, and it just provides clarity, I guess, to the insured and as you as the agent and advisor. So it's just made for a smooth, easy process because obviously when they're going through this situation, they've got a lot going on. Looking at the chronic illness. So the chronic illness can't do 2 of 6 daily living activities. Like I said, table 4 or better. The max issue age of this is 80. So you're unable to perform 2 of 6 ADLs. And the biggie here is, like I said, it's a pay-if-you-use-it rider or endorsement. So the max per election is 24% or $240,000, whichever is less. You can take an election every 12 months. So what we do here is, and we've got a great changing needs report on our software, and I would really highly recommend everybody jumping on the software when you get a minute. If you have questions, obviously call the people at Premier. Feel free to call me. They've got a good handle on it, obviously, but it's called the Changing Needs Report, and that'll give you some really exact numbers and numbers on current rates and whatnot, but an easy way to kind of look at the chronic illness. So let's say they have a $100,000 death benefit. They take 24% of that $100,000. So that's the amount that the death benefit will drop, is the full 24%. So the death benefit obviously drops to that $76,000, but you kind of go off their age. So the older they are, the better the benefit. So let's say they're 75, you take 75% of that 24,000, and that's the amount they'll get. So the whole kind of time value of money. So they'll actually get 18,000. Death benefit will drop by that full 24%, which in this scenario is 24,000. So they're gonna, if they were to pass away, they'd get 76,000 of death benefit. But in year 2 of this chronic illness, they're able to go against the initial death benefit. So they do this whole thing, the 24%, up against the full $100,000 death benefit. So the initial death benefit. So they obviously go back and do that, and they can, whichever is greater, they can go down to 5% or 10,000 of death benefit, and that's when the benefit stops. And the policy, you've got whatever is left of that death benefit for heirs. Then terminal illness, a physician has to deem the insured 24 months or less to live, and they can take up to 75% or $750,000 of the policy, whichever is less. So that's a little more straightforward. Just have to have been deemed to have 24 months or less to live. What happens if they live 30 months? That's just kind of the nature of the beast. If a physician deems them to be in the situation 24 months or less to live, that's when they can get into that terminal illness and get into that living benefit. Any other questions on that, Kelly?
I think that's really great. I guess one thing, you mentioned in year 2 on that chronic illness rider that it would come off of the initial face amount. Is that the same in subsequent years as well?
Yep, exactly. Exactly.
Perfect.
So
that's a really great feature. So you're not actually, you're still able to accelerate, and you're able to accelerate off that full face amount rather than the decrease to face amount each year. So you're still getting that same benefit until the policy exhausts itself. So that's really a big deal.
Exactly, and that's really what we're going for. And I guess just on the chronic illness, you can take as little as 5%. So it doesn't have to be that 24%. It can be as little as 5% of the initial death benefit. So just something to remember there. So any other questions on that?
I'm not seeing any.
Perfect. Now what I'd love to do is kind of just talk about our index universal life. And something I kind of want to point out actually before I dive into that is that at North American, our quote-unquote sweet spot, when looking at products and how they're going to be priced and whatnot, our sweet spot is from age 25 to 70, death benefit 25,000 up to 5 million, and then obviously super preferred to table 4. So in situations where something falls into those categories, we're going to be very, very competitive. We're going to be near the top when it comes to pricing, and then obviously performance. So just an FYI on that. So now kind of moving on to our Index Universal Life. We've got our Builder IUL, Guarantee Builder IUL, and then Rapid Builder IUL. I'll just give a quick briefing on the, I guess, differences of the products. Just quickly, the Builder IUL, name of the game there is long-term cash. So maybe in your retirement planning cases, college funding cases, the Builder IUL is going to be a really, really nice product and very competitive product when it comes to performance, as well as cash accumulation. Then you go over to the Guarantee Builder IUL. Pretty self-explanatory there, I guess, is the guarantee. So it's really built a lot like the Builder. You're going to pay a little more cost of insurance charges and whatnot in most cells to get that guaranteed death benefit. So I call it the double-edged sword. You've got cash accumulation opportunity through index performance, and at the same time, you've got a guarantee. Something I do every time I run a custom guarantee is run a Guarantee Builder, because you've got that upside, that flexibility of the Guarantee Builder and index performance. So that's a biggie that I run into. And then the Rapid Builder IUL, name of the game there is early cash accumulation. So maybe you get an older individual. They're looking for some retirement. They got into the game a little longer. There's no premium load, so you're going to get some earlier cash accumulation with that Rapid Builder. So just talk now. I kind of want to just talk into a broad sense, I guess, with our IULs, some differentiators, and a biggie is how we credit interest and how we use the index on the interest crediting. So we credit interest at the beginning value of the index segment. So what do I mean when I say this? So let's say you've got $1,000 at the beginning, just using simple numbers here, $1,000 at the beginning of the is the beginning value, we'll say. What we do, whatever you gained on your index performance, your interest performance in that year is going to be credited on that beginning value, so that $1,000. A lot of other companies are going to credit interest at the end of the value, so the end value, I guess, for lack of a better term. So maybe they have $10 each month of cost of insurance and different charges within the policy. They're going to credit their interest and their index performance at the value that after all of those charges, so 120 off that 1,000, so you're sitting at 880, and that's what they're going to credit on. So it's a really pretty big deal, actually, if you think about that, being able to credit at the beginning value of the index segment. Any questions on that, Kelly?
No, I don't think so. I think that's, yeah, and it's what an advantage to have that credited on the full amount rather than, for lack of a better way to put it, a discounted amount.
Exactly. And
when you're taking out that policy fee and such.
Exactly. And those, cost of insurance, that's all going to come out, but it's going to come out after the fact. So you get that beginning segment, before those charges come out. So yeah, that's a really, really big advantage that North American index products do have. We do have anything else on that? No?
No, I don't think so.
Perfect. We do have a guaranteed interest rate bonus on our index accounts. With the Builder and the Guarantee Builder, it's 0.75% in years 11 and up. And then on the Rapid Builder, it's 0.75% in years 16 and up. So that's really a nice feature. Really, kind of the name of the game there is focusing on that long-term cash accumulation, just giving you that upside. So let's say the cap, just for easy numbers, is 10%. Essentially, in years 11 and on, it's going to be 10.75%. On the Builder, using the S&P, the cap is currently 13.5. So 14.25 would essentially be the cap. Then you got the floor of 0. That turns into 0.75% in years 11 on in the Guarantee Builder and the Builder. So that's a very nice feature. We do have a minimum account value So this is a really great feature when it comes to our index products. So we've got the 3% true up is what we call it. So if over an 8-year period the index performance is below 3%, we will look back and true up the policy to have gotten 3%. So someone might say, what happens if the policy owner or the insured passes away in year 4? It hasn't performed up to that 3% in those 4 years. We are going to give them the 3% for those 4 years. So if something were to happen, policy surrenders or whatever, before that 8-year period and that does not perform up to that 3% over those X amount of years, you will get the 3% true up. So that's a really, really nice benefit.
So Brandon, in the case of that you just talked about where the insured would pass away within that period, is that something the family or the agent needs to ask for, or is that something that North American just automatically does as a courtesy?
Yep, the policy service team and whatnot, they know that that's a built-in feature of the product, and they'll get that. Yep.
Great. You know that just gives you a little bit more peace of mind that you're still never going to get less than that 3%, regardless in that time frame, and you don't have to worry about it.
Exactly.
North American's going to take care of it.
Exactly.
Great.
Another nice feature with our index products is our variable interest rate loan. If any of you have jumped on to our software and run it, you'll notice that it's currently running at 5.8%. Currently, the variable loan is actually 4%, and we have a cap on it of 6%. So when it comes to the variable interest rate loan and illustrating purposes, North American is as conservative as we can get. We go off the 30-year look back of the Moody's corporate bond. So that's where we get that 5.8%. So if you think about it, we have a cap of 6 and we illustrate 5.8%. So that is about as conservative as you can get, especially when it's currently at 4%. But history tends to, I guess, repeat itself, and I would guess that the 4% at some point will kind of trickle up. So that's where we come from, that 5.8%. That's where we get that number. So we just choose to be more conservative than most when it comes to illustrating our products. And then in year 6 on, I guess I should also notice that, or mention, there is a net cost zero loan. So obviously, to zero, you're getting your money at 0%. So the variable loan, you have that opportunity for that positive arbitrage when it comes to your interest performance or your index performance.
Very good. I got a couple questions out here, Brandon.
Perfect.
Are the accelerated riders, are those available on both the term or actually I should say all of your products? Or are they just on the indexed and UL products?
Index and UL products. Terminal is available on the term, so you've got the terminal, but critical and chronic are not available. I will mention this. Obviously convertibility is the biggie that I talk about with our term. So when converting that term, they can go through underwriting to make sure they qualify for that accelerated death benefit endorsement. So they can go through underwriting. It's not going to change the fact of, let's say they're preferred, and when they're 8 years later or 10 years later, they'd now be a standard. Well, that doesn't really matter when it comes to the next product because they're still going to get that preferred rate. But we go through the underwriting just to make sure they qualify when converting to, say, the custom guarantee. So it's not a lost cause if they go for term. They still have the opportunity, if and when they convert to our permanent products, to get the chronic and critical and terminal.
So there is a possibility that going through that underwriting, they just wouldn't be able to have those riders allowed, but they would still be able to convert to that product at their previous rate class.
Exactly. So the underwriting is just to make sure they qualify for the accelerated benefit endorsement.
Perfect. Another question here I have is on the index cap. It drops to 7% after year 11, correct?
The 0.75%?
I'm thinking that may be on the loans he may be talking about.
Oh, so the loans, in year 6 and on, the cap is 6%, and that is what it is. So we can never go above that 6% on those variable loans, and that's years 6 and on. The variable loan is available. So years 1 through 5, it's just a straight fixed loan, and the cap is 6, so it obviously can never go above that 6. It's currently at 4.
Right. And the cap on the indexing strategies will vary from time to time, correct? Depending on how the market is performing.
It all depends. Yep. And something with North American is we do pay for a higher cap. So a lot of cases and in a lot of scenarios, you might think apples to apples is running an illustration of 7% for Y company and 7% for X company. Something to be cognizant of and just make sure you're aware of it is where are the caps on those specific products. One cap might be 13% and another might be 10. Well, in the long grand scheme of things, the product with that 13% cap should perform better over the long run. So that's just something to be aware of. Because with North American, we do pay for a higher cap within our product. So you've got higher charges within the policy in order to have those higher caps.
And one thing I will say about your illustrations is it does lay that out very, very nicely within the illustration. You can definitely see within all of the strategies what the caps are, as well as what the performance has been.
Exactly. And really that's what we're going for, is just to have everything out there, obviously at the agent's fingertips, and just have everything readily available for when that question does arise. Because obviously a lot of these cases you're asking someone to trust you, and we want to be there to support that relationship with the agent and the insured.
Very good. Well, Brandon, I don't see any other questions out here. I think our time is up this morning, but definitely if anybody has any questions that they didn't get a chance to ask, or think of something after we're done with this call this morning, you can certainly give us a call here at Premier at 800-365-8208 and just ask to talk to a life marketer, and we would be more than happy to get those questions answered for you, or illustrations for any of your clients as well. And thanks, Brandon, for your time this morning and all the great information about North American's products.
Yep. Thanks, everybody, and happy selling.
All right. Thanks, everybody. Have a great day.